Hi folks, Tacitus today, your pushback channel, and thank you for joining this audio no pictures live stream. Please listen to this presentation as you would a radio broadcast. In this essay, I'd like to talk about the concepts of capitalism, supply and demand. Now, one of the reasons why capitalism is a system that does much better than communism in terms of generating new wealth is because it's got a natural capacity to avoid wastage. If a product isn't selling, or if a service isn't being accepted by the consumers, then there's adaptation takes place. So resources are reconfigured to get a more optimal outcome, which means wastage is minimized and profits are maximized on a relative basis. I mean, it's not a perfect system, but on this basis, then things like products that don't sell, or property that can't be rented, or services that nobody wants, they don't stay around. They don't exist for very long. So resources that would have been wasted on those losing ventures, unsuccessful ventures, pointless ventures, then are put into more productive pursuits, and this is why capitalism, I mean, that's a simple explanation, of course, but this is why capitalism succeeds where communism fails. Communism, on the basis of pursuing ideological equity, will continue with loss-making, destructive investments and activity purely on the basis that it produces the ideological result but fails on all other counts. For example, in communist societies, the idea that there would be 100% employment. So they would simply keep on subdividing jobs and subdividing jobs until everybody was technically at least employed, but very few people were doing productive work. So it's the classic sort of case of there's one delivery van but 20 delivery drivers, but only one can drive the van at a time. But they all work in the delivery van department, but with only one tool of trade there. So it's hopelessly unproductive, even though there's, again, full employment. But coming back to, in high school, this is where I first sort of came across economics, was in this high school economics class. And this was, classic textbook capitalism and so on. And they, real sort of 101 basic stuff, but supply and demand was a huge factor that, and I'll boil it down here. The essence of it was that if demand exceeded supply, then until supply caught up with the demand, prices would rise and there would be temporary scarcity. The reverse was the case, that if supply exceeded demand, then prices would fall until equilibrium was achieved. So the idea was that in a capitalist economy, supply and demand was always chasing equilibrium, and it may take a little bit of time for one to catch up with the other, but the idea was that it would happen fairly quickly. And as soon as the supplier of goods or services realized that they couldn't get any sales, they would either improve their product, reduce the price, or do whatever until that equilibrium was achieved. Now that seems to have gone out the window in the globalist controlled Western economy. Monopoly, oligopoly, and cartel pricing is all the rage, and so this idea of equilibrium or market equilibrium, supply and demand, has simply gone out of the window. It just doesn't exist. There can be some factors still at play, but it's only those factors that the cartel type folks don't yet control, and they're trying to control it. Now, to illustrate this, I saw a video came up about a guy who's going around to prime shopping malls and shopping places, restaurant strips, that sort of thing in the United States. Now, this is prime real estate. We're not talking about, the corner takeout chicken shop in Oakland or something like that in California. We're talking about Manhattan Beach Boulevard. We're talking about Santa Monica shopping strip in the United States, and various other prime or what were once anyway prime shopping areas. And he's been doing these videos showing how in some cases there's up to 50% vacancies, as in shops to lease or to let or whatever, and they're empty. So you go down this prime shopping strip and find that 30, 40, 50% of the shops are empty. There's no one in there. Now this isn't just shops. This includes things like restaurants, for example, some pretty decent upmarket restaurants or themed restaurants. I mean, there was one quite in Santa Monica. There was one quite nice. It was like I don't know if anybody remembers that show Happy Days, which Henry Winkler in. It was like a take on 1950s America, and it was the what would you call it? The milk bars, the dairy play where you go in and get your milkshakes and kids would hang out, play pinball or something. So those type of. There was an outfit that recreated that 1950s sort of Chevy type atmosphere, and I remember going into there. But I haven't been to America since COVID. So I used to have to go there quite a lot on business, and often I'd be in a hotel or at times I'd be in a hotel down that Santa Monica end of town. And so I'd go down into the strip of Santa Monica, or at times I'd go down, I'd be closer to that airport area. So I'd go down on Manhattan Beach Boulevard. There were some nice little shopping strips around there as well, pretty upmarket. And this guy has done videos about how those places have gone downhill, and again with the incredible vacancy rate. Now, what's sort of surprising here, and this is where the supply and demand comes in, these shops, or many of them, have been vacant for 2 or 3 years, and yet the rent that they're demanding, the lease fee, you've got to sign it for like a minimum of 12 months. The rent they're demanding is absolute top of the top. So they're saying, I could come to this shopping strip that's got 40% vacancy. There's boarded up and empty shops everywhere. The foot traffic is through the floor. The people just aren't coming to this place anymore. So, but if you want to rent a shop here, you'll pay absolute premium rent. And by American standards, or even LA standards, or big city standards, is premium of the premium. And now, why would you do that? So you own a shop that you want to run. You got a big sign up saying you want to rent. It's in, you go online and it's listed there as a place you want to rent. So ostensibly, you're trying to rent it, or one would think. And yet, you've had it there for over 2 years, demanding premium rent. The rent hasn't budged. You haven't lowered it 1 penny from the rent you want. So you're making no effort to get people in. If somebody wants it, they'll pay top dollar, and if they don't want to pay top dollar, screw them. Now, in a market-driven supply and demand economy, it doesn't work that way. You offer various incentives for people. If you sign up for 12 months, we'll give you the next 3 months for free or something, or we'll lower the rent, or we'll give you some other. What must we do to get someone into this shop? Because getting some money is better than getting no money. So you try and cut deals. You'd be out trying to woo and attract. Go courting, if you like, trying to attract customers to come in, or business owners to come in and rent the premises. Maybe convert it, like say, make it an office, or so. I don't know, anything. But you'd be out there offering some sort of deal sweetener, or again lowering the rent is something that would be obvious you'd do. And again, in a capitalist supply and demand economy, you're supplying retail space that people aren't buying. People don't want it. So what do I have to do to make them want it? And that's the essence, the 101 of capitalism. That's not happening here. But none of the shops are doing that. None of the office space in this area is doing that, or in other areas. And again, I've traveled the length and breadth of the United States a million times over, and gone to some of the nicest, or I like the upmarket shopping malls, or places where there are a lot of great restaurants, cafes, that sort of thing. I'm going to Philadelphia and staying in Rittenhouse Square. And there was this really, really great coffee shop on on the corner of Rittenhouse Square, and there was another restaurant just down the street that was pretty good. I liked it, and pretty good pizza place too. And now, this guy's done a video there, and these places like it's a boarded up shithole now. Now, again, given when the upmarket shops move out, then the clientele sort of that would frequent or patronise those shops, they've gone, and so now there's illegal aliens roaming around, drug addicted, screaming and harassing people and yelling obscenities at them. Things that I remember when I first went to New York, I couldn't believe it. Every street I went down, there seemed to be non-white citizens or people there that were yelling, I don't know, expletives that I hadn't even heard before. Wow, my education in four-letter words was certainly broadened. So it's like that now in these places. It's like the shitty end of town has come into what were once these vibrant, bubbling shopping strips. Now, the people with money have gone. Now, what are the reasons for this? Well, I mean, COVID did have an effect on things. That slowed stuff down. Clearly, COVID also caused the lockdowns, had a knock-on effect of, say, increasing the amount of online shopping that people do. So that's certainly increased, and there's more and more people doing it. You look at well-to-do areas, and it's nothing but couriers traveling up and down making deliveries. So clearly and those people with money are the ones that would have patronized places like Santa Monica. But the people are still in Santa Monica, even shitbox apartments in Santa Monica, cost $1 million if you want like beach views. It's a nice beach down there. If you want beach views, then you're paying even more again. So the people are still there, and the money is still there, as in the consumers are still there, and the incomes they have are still there, but they're not. There's nowhere for them to go. Again at Santa Monica down in the shopping strip there, it's a place I've been to a gazillion times, and it was always very vibrant, very upmarket. There were people with money there and patronising the various businesses, and so there's a really great hobby shop there. I remember going into it, buying some stuff for my kids. But anyway, that's all changed. So, but this idea of the not meeting the market is now how things are done, and it's no matter whether it's in office or retail real estate or in private real estate, people will have their property in residential real estate. They'll have their property for sale for a year, longer than a year, as long as it were, but they won't budge on the price. This never used to happen. And there are a lot of properties out there, where they're just not budging on the price. That didn't used to happen. If there was a surplus of houses there, or a lot of houses that the price would be lowered, and the same goes for, say, employment. There are businesses, and plenty of them out there, that insist the real solution to the not being able to find workers who work for shit wages, the real solution is mass migration. Is it paying better rates for better wage rates? Is it offering other benefits, such as maybe say better employee amenities, like maybe offering breakfast or lunch or so? No, it's nothing. I think that we just need mass migration. That'll fix it. We just need people who work for shit wages. That's what we need. That's what we want. And there are also a lot of businesses that are very marginal, farms as well, very marginal, that rely on dirt cheap labour. Without dirt cheap labour, they are screwed. But that's not a viable business. So they can't survive as a business if they pay commercial competitive market rates. What this means then in the economy, that there are vast resources and money and capital tied up that are not redeploying to productive purposes, because they're tied up in this cartel oligopoly type mentality that that isn't market market economics, supply and demand at all. It's almost it's almost the opposite of that. Now there are a few other factors as well. Just looking at some of the shopping malls around, say, areas around Australia where again shops have been empty for a long time. These are often owned by offshore interests or the big investment firms. They're not owned by private investors or the likes of you and me. They're owned by the big money end of town or the tax avoidance end of town, either one or both. So say a bunch of Chinese or Indians come and buy the property. They use offshore money. They use an offshore management company, so they can do a lot of things to offset any profits against tax, to make sure they never make a profit and these sorts of things. The high rates they'll charge that to a Chinese business, but then they round robin back again. So you pay these high rates, but we'll guarantee you customers under a round robin cartel system. And so the rent actually fits into a wider economic subset within the Australian economy or the US economy that is again absolutely opposed to and the opposite of market competitive capitalism. So what we've got here is that and one final point I'll make here is that the rent that you nominally charge for these places becomes, if you like, a backdoor indicator and assessor of what the value of the property is. So if you say that you're offering that shop for rent at $1 million a second or something, then you can value your property at $1 billion, because that's the theoretical, not actual, the rent return that you'll get. But if you actually get someone in to rent that property, and in order to attract them, you say instead of $1 million, you only have to pay $100 rent, then the value of your property, notional value in terms of its income generating capacity, the notional value of your property goes down from $1 billion to $1 million, say. I mean, this is all for example. And so suddenly the loans that you have, that may also be in the loans that you have must be instantly called in, because the value of your assets is now less than the value of the money that you own, or the amount of money that you owe to the bank. So you have to artificially inflate the value of your assets in order to maintain that amount of leverage that you have. So it's not in your interest to actually get a tenant in to rent that shop or that office or whatever it might be, because in order to get someone in, you have to lower the rent, so you can significantly lower the rent in order to get someone in. But you can't do that because your leverage is exposed, given that the income earning value of your assets will then decline and so on. So some of it's tied into over leverage and indeed the concept of the mathematics of the value of the property versus the rent you can get versus the loans you can raise or the loans you can keep. So this too is part of the issue. But I guess just understanding, we live in a situation where in the West, where the amount of the economy exposed to competitive market economics is declining. I mean, it's nosediving, for goodness sakes. So we're already getting close to a situation where capitalism, certainly as it's known or that we've been known to understand it, and that was in high school and college and so on when I was doing the rounds in the education system, that doesn't exist anymore. It's already gone, and whatever little bits remain are fast disappearing. You've been fantastic today, your Pushback channel, and thank you for listening.